All right, let's take a look at the market, these markets this morning. This video, I want to show you how yesterday, play the video. I showed you how to set up an indicator-based zone trading system, meaning you don't have to turn on the strategy to find these zones. I showed you exactly how to set it up. When you go to the members download page, it has all the verbiage, how to exactly emulate the exact chart I'm showing you right now. So play yesterday's video. It goes over all the settings, how to set the chart up, and how you can use an indicator-based system to find these zones to buy and sell on any given market. And then we can use a strategy. Today's video is how can we use this strategy when we're at these zones or inside these zones to fire ourselves in the trade if you want to use the automated strategy. So let's look at today's live data right now. We got going on. The market's trading right now. We're looking for a buy setup. It's coming down to our buy zone. So we know with our 30-year back-tested zone, this is the best zone to trade in the direction of the overall trend. If it's red, we're shorting. If it's green, we're buying. Right now we got a green zone. So we're looking to buy. So there's our zone. There's our 25 zone with trend. Price needs to get inside of this zone and then give a reversal candle at this zone. So we're getting close to the zone. Okay. Hey, Aaron, good morning. George, good morning. So let's take a look at the trades. We've only had 2 trade setups since midnight so far. We had 2 sell zones. We're coming into a buy zone right now. So play yesterday's video. This is all indicator based, these zones. So what we like to do is we like to look for shallow liquidity grab pullbacks where the market tries to take out wrongly positioned traders or counter trend traders. And we have these zones that pop up that tells us where to buy or sell on a pullback. So if you look at these red dashes, these are sell zones as we move down. Sell zone, sell zone, sell zone, sell zone. And then the green ones are buy zones. So these are buy zones, buy zone, buy zone. We're going to have a buy zone coming up now. When price gets into, let's look at this sell zone right here. When price got into this sell zone, you can see price entered into in between this sell zone right here. Once it enters the sell zone, it needs to reverse in that sell zone. It needs to come up anywhere. It cannot break 86.25, the high of that dash line or the zone. It needs to do a reversal candle and give us what's called a V-top to confirm that that is a sell setup. For example, we've had 2 trades that have been successful today so far. We've had 2 sell zones. Let me blow them up for you. So you can see what price did. Let me get this out of the way so you see the sell zone. This is the projected sell zone that came up. This is a lot of, for you European traders, I love the trades right after the London opening, which is 3 o'clock a.m. Eastern Standard Time, the London opening. London opens up at 3. We get a trade set up right afterwards, about 15 minutes after 3. So price comes into the sell zone. Right now, the 30-year back-tested trend is red. Our zones are red, 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 red. Only looking to short. We don't counter that. We're only looking for 25 sell zone shorts. We get inside there. It got at the zone, which is good. Closing inside the zone, close inside zone, close inside the zone. So it can go all the way up to the top of this zone and give a reversal candle. If it ever closes one candle outside the zone, there's no trade. Then we get the big reversal candle right here. Now this is a 1-1-30 chart, Unirenko chart. I'm sorry, a 1-1-35 Unirenko chart. There's also, there's a 1-1-35 and a 1-1-30 in the room. You can use it a 1-1-35 or 1-1-30. A lot of traders use a 1-1-30. A lot of traders use a 1-1-35. Totally preference. It's just going to be the 30 will change in 35, vice versa. This is a 35. So that means once it reverses, it closes red. Once it closes red, you have an active trade right here at 87.5 to go short at 3:13 this morning. It's an active trade to go short. Now, you can use Chart Trader to go short, to trail your position, enter your position, and so on, and place your stops, etc. Now, what you can do, though, is you can use our automated system to take the first liquidity grab after the V-top or V-bottom, the first distortion in price. So what you can do, this is an indicator-based system, but you can have the strategy on top of the same chart. And it will go short the first liquidity grab, the first distortion in price to get short. So it got you short at 83.5. So this one over here, when you got into the zone this morning, right after 1:30, you got a V-top. The first distortion in price would be right here. This is where the automated strategy will get you short also. So you can look to take the short after the V-top or V-bottom here, V-top or V-bottom. And what I educate traders doing, if you do that, the 1-135 chart works well doing that because you don't get a lot of V-tops or V-bottoms inside of the zone. Remember, these zones don't change. All right, they don't repaint. So these are qualified zones when they get inside of them and they reverse. If you go lower Renko sizes, meaning if you go down to a, let's say a 1-115 or a 1-120, you're just going to have more V-bottoms and V-tops inside of the zone. Or if you go down to 1-110, right, or whatever. The highest I educate to go is a 1-135. 1-135 because it shows you exactly where the V-bottom is going to take place without showing you multiple V-bottoms and V-tops inside the zone. But most traders that lease the software, they're either a 30 or a 35. It's totally preference. Some scalpers that want to scalp the market, they'll go down to a 1-120 and scalp the market because it will reverse. It's just a lower stop. It gives you a lower stop. So that's totally preference how you guys want to do it because the zones don't change. So what you can do is you can use the automated strategy once you get inside of the zone. Once you get inside the zone, the automated strategy, what you can do is you can click on it under the control center. And then you can look to take these trades. So what you can do is once the zone is reached, I'm going to show you how to do this. You can just double click. It will take the first distortion in price, which is the first liquidity grab here, or the first liquidity grab here to get you short along the market. Now you don't, this is an indicator, this is all indicator based, so you don't need to have the strategy running on all trades. You can cherry pick and take only zone buys and sells. Since you're not using the strategy to get this zone, you're using two indicators to get the same zone. You can just leave the strategy off by clicking off the strategy and clicking it on just when there's a setup inside of the zone. You get around sometimes 3, 4, 5. We had 5 trades in a row that worked on a couple of days ago on my zones in a row from 8:30 to 1:30. 8:30 to 1:30 is 4 trades in a row that worked. And then 8:30 to 4, 5 trades in a row that worked. Just a couple of days ago, I showed you guys. I sent the charts out. But you can turn on the strategy when you get inside of the overall zone and let the strategy automatically pull you in if you want to do that. It's a simple double click of the system. So let's say you're getting inside the zone here. Price is getting inside the zone, and my automated strategy will not take any trades against this zone. So you want to make sure zone matches up your indicator. So under my indicator, if you look at it, I've got a 25 sim zone and I got a 1-165. So it's ready to take that trade based upon this exact indicator chart. It's emulating this indicator chart. So when I get inside that zone, you can turn it on and double click it on, and it will wait until it V tops or V bottoms, and then it'll get you in the first liquidity grab. And if it closes outside the zone, you can simply double click the strategy off, wait till we get into the zone again. It's a matter of one click. You'll see it turn on. I click it once, it'll turn green over here, and it turns on within a couple seconds. So you can use this automated feature only when you're getting inside of the zones, because I showed you on the previous video how to set up the backdrop on these zones all by themselves. All right, I showed you how to set the backdrop on these zones all by themselves as far as an indicator goes. Then what you can do is when you get in the zone, you can click it on. So you got in this zone right here, you start closing inside of it, you clicked it on, and then it got you short right there at 91.25. Get inside the zone, you can click it on, and it got you short right here at the first distortion of price. You can take it that way, called liquidity grab trading, right after the V top, V bottom with zone trend. Now, if you wanted to get right in at the V bottom or V top right here, be aware, the smaller Renko charts you go to, the more V tops and V bottoms you're going to get. So if I go to a smaller Renko chart, 1120, it may V top once or twice inside the zone. Run down a little bit, come up, V top. Run down a little bit, come up, V top. Because this is a 1135 versus a 1120 or 1115 or 1110, or even a 117. Some traders use a 117 on the S&P because they want real small stops. Then you're going to get multiple V tops. The zone won't change. You'll just get more V tops inside of the zone. Okay, so that's how you can use a strategy, automated strategy, inside of the zones. What you want to do is make sure you match it up, though, is that if you use a zone trend of a 1165, which I showed you how to set up, some traders will use a 11100 to smooth out the trend more. What that means is that you're getting more of a, you're not more sensitive price. Like a 1165 is sensitive price right now. Right now we're going into a buy setup right here, where 1100, the indicator, it doesn't change trend that much. It's had one sell this morning. You don't get a lot of setups, but they are with big trend. You can see it caught that big giant short right there from 87.75 this morning down to 66. 20 S&P point potential when the London opened. So see, here's against trend. So you wouldn't take this according to this longer Renko chart, but on the smaller chart, news just came out, you're taking that type of setup as far as that goes. So you can use, obviously don't trade this during the news either, news just posted, but that is how you can use the automated strategy. We're in this buy zone right now. That's how you can use the automated strategy inside of these zones, to fire inside these zones. Now, the automated strategy is going to be based upon this, your profit target and your profit loss. So let's say you have a 350 profit target, 350 stop loss, or a 300 profit target, 300 stop loss, or some of you want to be really accurate. Your stop loss can be more than your profit target. We're actually going to do a market replay on this and show you how to do that. If you want to increase your accuracy, you can actually have a little bigger stop, a little smaller profit target on these to increase your accuracy around the clock on even smaller Renko charts. But what you want to do, this is on one contract. You can change the contracts from 1 to 6 down here. Let's say you want to go based upon just the profit target and the profit loss. So what it'll do, it'll look for the $300 profit target and it'll look for a 300 stop loss. So as soon as, no matter how many contracts you trade, one contract up to 6, it's that $300 threshold, it's going to pop you out of the trade at a target, at a profit or a stop loss. Also, when it enters the trade, it's going to show a red stop line and a blue profit target line. That's based upon where you put your profit target and where you put your profit stop loss. You can double click on that stop level and trail your position just like you do chart trader. just like it did right now. See how it popped up right there? It popped up a red, right now it's in a trade. It popped up a red stop level. So you can drag this, click and drag, and wherever you click off on it, that's your new stop. So it's going for a $300 profit target right now, and you can drag and click this wherever you want on your trailing stop loss. So also your target's up here at 300. If you want to put your target out like say 600 and then you want to bring it down lower, you can do that also. But right now it's going for a $300. It got long right at the first distortion of price inside of this buy zone. So it got long right there at 86.5. I put $300 as my target. Doesn't mean you have to keep 300. You can actually lower it anytime you want, or you can drag your stop up and double click on it to wherever you want it to stop out. You see it just stopped out right there. It stopped out where I pointed and clicked. So you can trail your position also under the strategy if you want. Okay, so that's my that's how you can use the automated strategy with my indicator-based zone trade. So if we look what happens today, it's had 3 back-to-back zone buy setups. So it's been 3 for 3 since midnight. Sell zone, sell zone. There's your buy zone. Here is your buy zone. And now we're cranking higher off the buy zone with news. Okay, so we can use the strategy to do that, to manage our position after we get in and so on. All right, so this is the 25 zone. We're only looking for pullbacks to these zones with our 30-year back-tested trend. Our 30-year back-tested trend is green, only looking to buy. Our 30-year back-tested trend is red, only looking to short. Now, what I do have, I have larger Renko size charts. I mean, larger liquidity grab zone charts. Here's one today. This is a 135 also. As long as it doesn't close below it, it was at 831. This is the same trade we just had on the buy zone. It gave confluence off a larger deep zone. These deep zones are awesome. If you look yesterday and the whole trading session, it caught this low. It caught this low. This was a 901 all the way up to 21, a 20-point S&P point potential move. This was a 98 3/4 all the way up to 17, another 20 S&P point potential move. So that was 2 trades, 40 S&P point potential just off these larger, deeper zones. These are deep liquidity grabs. Same thing though. We need to come down into the zone and it must reverse inside of the zone. This is at news, right at news. It must reverse right inside of the zone. It cannot close outside of the zone here, or it's got to touch it. It can't close outside the zone here. It's got to come down to the zone, and it's got to reverse exactly. That's how accurate these zones are. It's got to exactly reverse exactly at these zones. Now, what if you wanted to run a strategy at these 200 and 100 zones? Then you're going to have to set up a strategy at these 100, 200 zones. So what you would do, you would just go into the strategy and you would put into the strategy, you would come up and now you would just do what? You would come in and you would put this as your zones. I mean, you put in this as your, you would put this as a 100, your 100 zone. And then the 100 zone, it got down to the 100 zone, it would look to go long the market on the first liquidity grab going there or there. All right, so you can do both the 25 automated, and you can also do the smaller Renko chart. Okay, very, very simple to do, not hard to implement when you get inside of these zones. These zones can be very accurate for you. Just remember, if it's red, you're looking to go short. If it's green, our 30-year backtested zone, you're looking to go long. We must get inside of the buy zone or inside of the sell zone. Okay, inside of the buy zone, inside the sell zone. You guys got it? So that's what we're going to do.